Welcome back, everyone. I'm Jordan Giesecke, and this is The Limiting Factor. It's been 6 years since I made a video about Tesla's valuation, or Tesla's stock price. At that time, Tesla's stock price was ripping, and people were worried it was in a bubble because in the prior 3 months, the stock price had tripled. I said that it was just a revaluation event, and the stock price would have to at least triple again before it was in a bubble. That turned out to be correct. Now, there's another potential critical event for Tesla's valuation. There's talk of an imminent merger between Tesla and SpaceX. If you're a Tesla shareholder and a merger does happen, that could have a huge impact on your investment. So in this video, as a Tesla shareholder myself, I'm going to weigh in and share my thoughts on the topic. Before we begin, a special thanks to my Patreon supporters, YouTube members, and Twitter subscribers, as well as Rebellionaire.com. They specialize in helping investors manage concentrated positions. Rebellionaire can help with covered calls, risk management, and creating a money master plan from your financial first principles. First, for background, most engaged Tesla shareholders know that recently there's been increased talk of a merger between SpaceX and Tesla. Different versions of that idea have actually been floating around for half a decade or more, but it was always more speculative. Now that SpaceX is public after completing its IPO, Elon's close associates are saying a merger is imminent, and bets are being placed in prediction markets that it will happen before spring of next year. With that background in place, it's also worth making a note on valuations. Valuations are tricky due to what I call the Schrodinger's valuation problem. By that I mean, just as Schrodinger's cat can exist as both alive and dead until an observer opens the box, a stock can be both under and overvalued depending on what investing framework is applied. That is, there is no absolute truth when it comes to stock price valuations because they're just as much a property of the person doing the analysis as it is the stock itself. That means if a merger is announced, in the run-up to the vote, each investor needs to decide for themselves whether the merger offer is fair and vote accordingly. Let's use SpaceX's valuation as an example. For the initial public offering, how was SpaceX's stock price set at $135 per share, which was a market cap of $1.77 trillion? It's more straightforward than you might think. SpaceX and the underwriters met with investors, and there was overwhelming demand at the $135 per share price point. That is, they took an educated guess at the price the market would support, and it was a take-it-or-leave-it situation. The S-1 document SpaceX filed with the SEC for the IPO showed that the company is nowhere near supporting a $2 trillion valuation based on current earnings, but that the company is growing rapidly and quite literally has a stellar total addressable market, or TAM. That is, investors that buy SpaceX stock are in it for the potential future cash flows. So, right off the bat, one investor might say that Tesla's current valuation isn't supported by its profits, so it's overvalued. And another investor might look at the stock and say that it's going to be worth 10 times more in 10 years, so it's undervalued. Both points of view are rational. What differentiates them is risk tolerance, time frames, and investment goals, all of which are personal characteristics rather than a characteristic of the stock. With all that in mind, as a Tesla investor, what's my view on a potential merger, and what would I want to see in a merger proposal? And if I'm not sold on the terms of the merger proposal, how would that affect my overall investing strategy? Let's take a look. And bear in mind, this is just my perspective and not investing advice. Do your own research. To kick things off, in principle, I'm fully supportive of a merger between SpaceX and Tesla for 3 primary reasons. First, it would reduce the unnecessary bureaucratic and regulatory load on Elon. Second, it would reduce duplicated resources between the two companies. Third, the combined company would have a larger net to attract and retain talent. In other words, the point is to increase the number of brain cells and brain cycles devoted to execution and problem solving while reducing costs. As for valuations, based on discounted future cash flows, analysis I've seen online and conversations with AI chatbots indicate each company is currently worth around $2 trillion. As I said a moment ago, this is subject to the Schrodinger's valuation problem. Each investor has to decide what they think each company is worth and make their decisions accordingly. I won't get into the weeds here on why I think the $2 trillion valuation makes sense for both companies. That's because the products that will deliver those valuations don't exist yet at any sort of scale, and the timelines with new technologies are prone to fits and starts. However, here's my high-level logic. SpaceX has a much larger total addressable market because it has extraplanetary ambitions of building a Type 2 civilization with space-based compute and colonizing the Moon and Mars. But it could take them almost half a decade to significantly tap into that TAM, and many technical and financial challenges remain. For example, most of the TAM is riding on a fully and rapidly reusable Starship, which is probably 1 to 2 years away if all goes well. After that's solved, it's still going to take time to ramp their launch cadence and for enough cash to start flowing into their coffers to really move the profitability needle. Furthermore, in the meantime, SpaceX is going to be devouring capital to build things like factories and launch sites. So, it could be 2 to 4 years before we see a significant revaluation event where the stock price goes to the moon. As for Tesla, their TAM is smaller because it's earthbound. However, robotaxi revenues appear to be on the horizon, and I expect enough cash to be flowing into their coffers from that product to cause a significant stock price revaluation in the next year or two by the stock market. Yes, there's also humanoid robots, but I don't expect significant revenues from that product for another 2 to 4 years. The implication here is that despite their similar valuations based on future cash flows, if Tesla and SpaceX were left to trade individually on the stock market, Tesla's stock price could easily double or triple in the next year or two. That's because the $2 trillion discounted future cash flow valuation is conservative, which triggers a massive stock price swing upwards when actual profits start rolling in the door. SpaceX, on the other hand, despite growing revenue from Starlink and terrestrial data centers, might trade sideways for several years due to cash outflows for capital equipment. So, if the companies merged instead of trading individually, that could dilute Tesla shareholders and delay their potential gains by 2 to 3 years or more, and time is money. Even if you just park that money somewhere making average returns, that would mean missing out on 15 to 20% growth. What all this means is that although I think SpaceX and Tesla should eventually merge, and although each company is currently worth $2 trillion based on future cash flows, I wouldn't want to see a merger happen in the next year or so because they're on very different timelines for supporting those valuations in the stock market with actual profits. But if a merger did occur imminently, what would I like to see as a Tesla shareholder? I'd either want to see at least $800 per share for Tesla stock, or for Tesla to make up 60% of the value of the combined company. To keep things simple, for 60% at $800 per share, that would value Tesla at $3 trillion and SpaceX at $2 trillion, or around $150 per share. Yes, $800 per share would mean foregoing the potential gains I expect to see in Tesla stock in the next 2 years. But it also acknowledges the benefits of a potential merger for longer-term growth and improved efficiency. The question is, how would SpaceX shareholders feel about those merger terms? On the one hand, SpaceX has a larger potential TAM, but on the other hand, Tesla would bring a lot of cash flow to the table to fund the ambitions of SpaceX without the need for further dilution or debt. With that said, all things considered, the merger deal that's most likely is a merger of equals, and Tesla shareholders might only get a 30 to 50% premium over the current share price. That is, around $500 to $600 per share. Either way, whatever the terms of the merger deal, I'd hold my Tesla stock through the merger period to take whatever is offered. After that, depending on what the valuation of the merged company is in relation to its growth prospects, I'd make a decision on how much of my portfolio it should make up. But my guess is that I'd end up selling a good portion of the stock. Why? Because the merged company could end up burning more capital in the next few years to grow the AI compute business than can be offset by the cash flow generated by the FSD and Starlink businesses. That is, it could be losing money. That, in turn, could mean a floundering stock price, potentially for several years. Then, if things look like they were turning up again, I'd reinvest. So, as much as I'm fond of Tesla and SpaceX, they aren't the only opportunities in the stock market. If the stock price looks like it's going to flounder for a year or more, and I see a company like Upstart or Lemonade that I think is undervalued and overdue for a stock price increase, I'll sell most of the SpaceX Tesla stock and make those stocks a larger part of my portfolio. In other words, I'll roll with the punches and I won't take it personally. However, I expect many Tesla investors would be very frustrated if the stock price gains they've been expecting for half a decade now are delayed by several years more due to merger dilution, and would probably be angry at Elon for it. I would view that as a rational response, but I can also see Elon's perspective. He has two companies that would be able to accomplish more and more quickly if they were merged. So, the sooner the better, because he believes his companies will create such great abundance that it will actually make money irrelevant. Even if that ends up being the case, it's going to take decades. So I don't think waiting a year or two for Tesla to see its next revaluation event would make or break the goal of a Type 2 multiplanetary civilization. That means if there is a merger proposal, I'll vote in my interest, and I expect everyone else to do the same, even if their interests run counter to mine. If it doesn't turn out my way, as they say, there's no crying in the casino. As a final note, this is the only video I expect to make on the merger. But if you like this type of content, my investing perspective, let me know and I can make one-off videos on other stocks that I'm invested in, such as Lemonade and Upstart. I think both companies could be highly disruptive. Although I prefer to focus on technology, it's also nice to occasionally use the investing side of my brain. As always, please consider supporting the channel with the links in the description, which now also includes a referral link for Signature Solar. If you use that link to purchase home battery or solar equipment, it nets me a small percent-based credit, but that can add up on a large purchase and it really helps the channel. On that note, a special thanks to my YouTube members, ex-subscribers, and all the other patrons listed in the credits. I appreciate all of your support, and thanks for tuning in.